Over the past several years, I've invested heavily into the JP Morgan Equity Premium Income ETF, and as you can see right here, here are some transactions from one of my long-term portfolios. Now you can see pretty much on a daily basis, I was buying shares of JEPI, sometimes 9 shares at a time, sometimes a share at a time. Now this is so much to the point to where as of right now filming this video, I currently have around 1,248 shares of JEPI throughout all my portfolios. Now in this video, we're going to dig deep into the JP Morgan Equity Premium Income ETF, explain what this ETF is, how it works. Then later on, I'm going to share with you my dividend income that I receive now on a monthly basis just from this single JP Morgan ETF. Then lastly, at the end of this video, I'm going to share with you my thoughts on JEPI, and if not, I'm currently buying more shares as of now. So if you want to learn more about JEPI and see a behind the scenes look of an investor like myself that's been buying JEPI heavily for the last 4 years, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So if you're still watching the video at this point, you're probably interested in this ETF, what it is and how it works. And honestly, at first, this ETF might seem confusing considering it is a cover call style ETF, but I promise it's pretty simple. It says right here on the website, the overview, seeking consistent premium income with lower volatility. JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity exposure with less volatility. Now, the portfolio is made of defensive equities, employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. So basically, the portfolio is built up of different names that the expertise from the managers choose. But along with that, this is what makes this ETF sort of special. They have a disciplined option overlay, which implements written out of the money S&P 500 index call options to generate distributable monthly income. Now, because of this option strategy, this ETF is able to offer a higher yield than most other stocks or ETFs across the market. And as you're watching this video currently, it's offering around a 6.82% 30-day SEC yield. Now, time out, I know what you're probably saying, that sounds pretty small considering JEPI and JEPQ and some of the other cover call style ETFs historically have offered 10% or even higher than that. And honestly, you're correct, but this is simply because during times where volatility is a little bit less rampant, premiums are going to be cheaper, which in the case for JEPI, because JEPI does sell premiums, JEPI is basically the casino in this aspect. When premiums are cheaper, JEPI is going to be able to generate less in premiums, which means in turn, investors are going to be getting less and less in dividends. And you can see this if you look at the last, say, 12 or so months. During times in the market where premiums were a little bit higher, dividends were also much higher. But that's just sort of what investors are going to have to expect if you want exposure to some of these cover call option style ETFs. Now, a lot of investors have ragged on JEPI over the last year or so, considering that JEPI has not performed as well as its brother JEPQ. But over the last year time frame, JEPI is in the green quite a bit. JEPI's had a nice run ever since October or so, when this ETF was trading in the low 50s, now at $57 per share. Now, over the last year, JEPI's up around 6.7%, but on the max time frame, JEPI's only up 14%. And I say only because this is during a time in history where a lot of similar stocks or ETFs are up much more. Although I guess the silver lining is that JEPI, of course, does offer a pretty juicy dividend, so the total return is, of course, much higher, which we're going to look into here in a second, so don't worry. Now, JEPI's holdings are the follow. There's a good amount of technology in the ETF, but not overly exposed to it. There's a good amount of industrials. We got some healthcare financials, consumer defensive, consumer cyclical, then a smaller portion of communications, utilities, energy, real estate, basic material, etc. Now, with the top 10 holdings of JEPI, there's things currently like Meta, Progressive, Amazon, massive companies that you and I would honestly love to have exposure to. But the thing to keep in mind with this ETF is that although you are getting exposure to some of these names, you are not going to get all the upside because, of course, that cover call overlay is going to cap the ETF's performance if the underlyings move up too quickly. And that's one of the main reasons a lot of people sort of rag on these cover call style ETFs because when the portfolio is trading down, the ETF trades down with it. But when things turn around and things turn bullish, the ETF can't really move up all that much because of that cover call overlay. Although during times where the market's trading kind of sideways, where other assets aren't necessarily making all that much money, cover call style ETFs can do wonderful. Now, the expense ratio is also something to keep in mind when it comes to these style of ETFs because it's pretty expensive to own. JEPI does have a 0.35% expense ratio, which is much more than like other index funds across the market, of course. Now, as far as dividends, we talked about the current dividend yield for JEPI and the fact that it isn't necessarily as high as you might have expected or as high as it's been in the past. And again, we talked about the reason being the fact that volatility is pretty low right now, so option premiums are pretty cheap. There's not really a whole lot going on in the market. It's not that crazy right now. But during times when it has been crazy, you can see JEPI's paid upwards of 60 cents on a monthly basis, which over a year time frame, that would give this ETF like a 15 or 20% yield, I think. But like I sort of mentioned, investors that buy into covered call style ETFs like this one, you're going to just have to know that during times where volatility is low, your dividends are also going to be low along with it. And even though it stings, I hate it as well, it's honestly just sort of part of the game, and you have to kind of take the good months with the bad months. Now, I will say this is important, so listen closely. If you are a dividend investor out there, or a dividend growth investor that's trying to build out a portfolio with a reliable, consistent amount of dividends on a monthly basis, this might not be the ETF for you, considering it doesn't pay the same every single month. For example, if you're looking for a high quality ETF that pays basically the same every single month, look at something like DEVO, the Amplify Enhanced Dividend Income ETF, which pays more or less 14-15 cents every single month and has for years now. Now, we sort of touched on earlier the fact that JEPI has not performed all that well as far as price return goes over the past few years, but of course the dividend has been pretty juicy at times. But to get an entire picture, let's see what JEPI has done historically. So if an investor was to have invested $10,000 into JEPI back when this ETF started in 2020 and reinvested all the dividends along the way, this investor would have turned a $10,000 investment into just over $16,000 in 3.8 years, or a total return of 60+%, or an average annual total return of 13.21%. Now, 13% per year is not too shabby. I don't know about you, but for me personally, I'd be very happy with 12, 13, 14% per year for the rest of my life. But considering during this time frame, a lot of things like even the S&P 500 have returned significantly more, it's not necessarily something to be super excited about. But for those dividend income focused investors out there that want dividends now, it's honestly not necessarily what I would consider a dividend trap. And I'm still a fan of it, which is why I still hold JEPI to this day. Now, lastly, how many shares of JEPI do I own currently? Like I said, I have 1,248 shares more or less, and I have not added a single share of JEPI in quite some time because I actually have been sort of cheating on JEPI and grabbing a lot of shares of JEPQ over the last year, which now I have 507 shares. But with the 1,248 shares of JEPI, which I currently bought at an average cost of around $52 per share, I think I spent just over $70K on JEPI, and again, I bought these shares over multiple years, and all in all, on a monthly basis, I think I'm getting somewhere of around maybe $400 to $600 on a monthly basis. Again, this totally depends on whether these 1,248 shares pay 30 cents, 40 cents, or 50 cents on a monthly basis. It's going to change like we talked about because of volatility and because of the fact that the JP Morgan Equity Premium Income ETF does not pay the same dividend for sure every single month. But like we talked about, I'm not necessarily going to buy any more shares of JEPI as of right now, especially not while it's so expensive. If there were to be a big dip in the market, I would consider grabbing some more shares of JEPI. But just because JEPQ honestly has better holdings in it for a long-term investor, I'd much rather utilize some cash balance and dig into that one just because I'm underexposed to JEPQ compared to JEPI. But I do not plan on getting rid of any of these shares of JEPI anytime soon. And honestly, I'm pretty excited that I'm finally up as far as price return goes just because I was down on my shares of JEPI for so long. So there we have it. That's the results of purchasing shares of JEPI over the past 3 or 4 years now, consistently buying shares for a while. Like I said, up until recently, where now I'm buying a lot more shares of JEPQ. But who knows, maybe in the future I'll turn around and grab some more shares of this one also. But now lastly, I want to hear from you guys down below when it comes to the JP Morgan Equity Premium Income ETF, known as JEPI. Do you currently own any shares of JEPI throughout your long-term portfolio? And you know what I'm going to ask next? If you do own any shares, how many do you have as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.